the average household, like if you do not understand the false narrative, you will make the wrong decisions you'll make the wrong money decisions. Once you understand the false narrative and what the real action is, you'll make better financial decisions for you and your family.
Yeah.
It's the underpinning for the whole thing.
Yeah, and I think people should realize that, the money supply is the reason why things don't feel right.
That's right.
They don't feel right. Things at the grocery store, more expensive. Going out to eat, more expensive. Fuel, more expensive. That's why it feels bad, because of inflation. We'll get into it.
That's right. Okay, so let's look at the actual interview where the CBC lies. And so this is Power in Politics with David Cochrane, okay, and Andrew Shear. And I want you to listen very, very carefully on the words, because they start out with the false narrative that inflation was caused by war in the European breadbasket, as if it's some esoteric Monet painting or something like that.
And I mean, what the heck does Ukraine have to do with us? At all. I mean, my ancestors came from Ukraine. They immigrated here 100 years ago. Okay, 120 years ago. But that has nothing to do with our money supply.
So listen very carefully to what they say.
To finish the job in the next election.
Right, but your party may not be able to rely on post-COVID inflation crisis that was fueled by, war in the breadbasket of Europe and supply.
David, you know this. You know that inflation is caused when governments print money.
Well,
that's what the Liberals did. The Liberals flooded the economy with brand new cash. It has nothing to do.
They spent money. They didn't print money. The Bank of Canada did not increase the number of banknotes in circulation in the economy. They used settlement balances.
David,
they used settlement balances to buy government bonds to put liquidity. I'm not being dishonest.
They created money out of thin air. They massively expanded the money supply. You know this.
They did not permanently increase the money supply, Mr. Shear. But anyway, I don't want to have an argument on monetary policy. They used settlement balances to buy bonds, to lower interest rates, to put liquidity into the banking system. And then they removed those settlement balances over time.
And then they removed the settlement balances over time. It was temporary. Okay, and the average person listening at home hears that, and they're like, okay, that sounds right. This is the CBC, and this is,
Well, let's be honest. The average person watching the CBC, they are boomers. They're in their 60s, 70s. They really don't know what the hell they're just talking about. Most people have no clue what they just said.
But they take it at face value.
Take it at face value.
He's David Cochrane from Power in Politics.
I mean, he's on the CBC, so he must be a trustworthy source of information for my boomer mind, but I don't think so.
And so, okay. And here's where it gets weird. This is where it really gets weird, because let's just say you're someone watching this, like, I want to see for myself. I want to pull it up. What did the Bank of Canada actually do? Did they really put temporary settlement balances in and pull them out? Maybe they did. Okay. So let's just say one person goes one layer deeper, and they search Bank of Canada balance sheet. Okay, and I hope this works out, because I'm pulling this last couple of days, but I just want, and I encourage you to do this at home too. Just do this at home too, because I want you to type in Bank of Canada balance sheet and load the page, and watch what happens when you just load the page. When you load the page, it's going to show you the Treasury bills purchased by the Bank of Canada. And you're going to see the Treasury bills were purchased, and you can see it increase from $24 billion, $23 billion, up to $140 billion, let's call it, okay?
That's a big jump.
It's a big jump. It's a big jump. But then David Cochrane from CBC starts to look normal. He starts to look reliable, because, yes, as he said, they sold them off. They temporarily injected the liquidity and then sold them off. Exactly like he said it happened. But this is not a one-dimensional issue. These are Treasury bills. So these are short-term government bonds.
So what's short-term?
Generally 90 days or less. I mean, some people might say 6 months or less.
So 90-day bonds.
Let's say 90 days
Not
or
a
less.
big rate of return on a 90-day bond, right?
Yeah, not as much of a rate of return, but they're more stable because the price doesn't move that much because ultimately they mature within 90 days, right? And so we call that the risk-free rate, right? That's what we were taught in school, that a 90-day Treasury bill is effectively, 90 days or shorter is effectively the risk-free rate. Of course, they didn't tell us anything about real inflation, but that's how they taught us in school, that was supposedly risk-free. It was risk-free on the assumption that the governments can balance budgets. But
so then what happened?
Then what happened is and this is the part where, this is where it gets weird, because why does the Bank of Canada website load to the liberal CBC regime talking points? Why does it load to the right time period and the right asset that parrots that talking points? But you can you can actually get more data out of this. So what happens if we say Treasury bills and now we have Government of Canada bonds? Okay, so these are, Treasury bills are effectively bonds too from the Government of Canada, but they're short term in nature. Right. So we call them Treasury bills. It's tomato thing. They're just short term, short duration. They mature within 90 days. Okay. Mm-hmm. Now you click the government bonds.
And these are long term.
These are long term bonds. Now the talking point falls apart. Okay. Now you start to see, wait a minute. They were purchasing at the same time. They're purchasing long term bonds as well. Okay. So they're purchasing short term treasuries. And when they start peeling off the treasuries and selling off the treasuries, they're not shrinking their holdings. All they're doing is, when they sell this off, when they sell the short-term Treasury bills off, they're buying the long-term Government of Canada bonds. Okay,
and they're buying them at an accelerated rate, so it goes way beyond 139 billion.
Way beyond. So, the purpose, and me and you were talking about this a few days ago, the purpose of buying the short-term treasuries was simply just for price stability. You're going to dump that much money into the market. You're going to dump hundreds of billions of dollars into the bond market. If you drop them all into the long-term bond market, you would get unpredictable price action. You'd be better off dropping some of that money into short-term treasuries, because those prices don't move that much, because mathematically they're just based on a maturity date that's very close in the future. Okay, so if you had to dump a bunch in there and you wanted to prevent wild price fluctuations, you would want to dump some into short-term Treasury bills and then slowly over time sell that off and buy long-term bonds, which is what they did. But in no way did the Bank of Canada reduce its holdings. In fact, it exploded its holdings.
Look at the peak there in 2022. Mm-hmm. What is that? That's almost $435 billion.
That's right. And in reality, it doesn't matter that much whether it has Treasury bills or Government of Canada bonds or real return bonds or Canada mortgage bonds or provincial money market securities or provincial bonds or bankers acceptance. It's what is the total assets being held by the Bank of Canada? What are the total investments? Okay. And so you start checking all these off. Okay. And you're going to see the big two are short-term treasuries, and you're going to see long-term bonds. These are the big two, okay? And that is the balance sheet. And you can see the total assets explode to $500 billion, $575 billion of assets being held by the Bank of Canada. And what do? It's literally a print of a button. They create the money out of thin air and go into the capital markets and buy these assets. Mm-hmm. It is literally the creation of money.
Yeah. So they issue the bonds and then they buy the bonds, correct? How does that work?
The federal government issues the bonds, and the Bank of Canada buys the bonds. But the Bank of Canada has the ability to create the money out of thin air just with a keystroke and actually go in and buy the bonds. And they're primarily buying them from financial institutions. They're buying them from banks. That's who's holding these bonds. These large, Canadian banks have, they have about, a little under $500 billion in Government of Canada bonds.
So then the banks have liquidity to lend.
Yeah, you're getting you're seeing it. You're seeing it in slow motion there. So, but first of all, like, how significant was this event? Because someone would say, maybe still a CBC apologist out there saying, like, well, they reduced the holdings over time. Man, we're not anywhere close. Like, we're not anywhere close. Like, just look at the scale of this. We're talking, we went from $117 billion of total assets being held by the Bank of Canada. And now we're at $250 billion, $245 billion in total assets. Okay. It's a massive increase. And we're sitting here 5 years later. We're nowhere close to where it was been. And this is where people need to see the historical significance of this action. Now you have this slider bar down here, okay?
All right.
And bang, you start dragging it out to see what is the historical significance. And I'm going to get rid of some of the other numbers here because it's like ultimately total assets are the main issue, and it's mostly long-term government bonds, okay? But I just wanted people to see the shape of this curve so you can get away from the noise a bit. Okay, these are the total assets of the Bank of Canada. Like, it's hard for me to get it in the screen here, Trevor.
Yeah, look at 2008. Like, that was the bump.
This is the financial crisis of 2008.
I gotta move you here.
Yeah, this is the financial crisis of 2008. Like, they went from $50 billion on the balance sheet of the Bank of Canada and then expand it to, let's call it $80 billion, a $30 billion increase, okay? And then they get it back down to, at the end, $58 billion, okay? Now, that just looks like a speed bump. It just looks like an anomaly compared to what happened in 2020. It's like in 2020, the Bank of Canada's balance sheet went from $117 billion all the way up to $571 billion.
Wow.
With a B. Basically zero to 60, like just immediately.
Right to the floor. And in the same thing that jumped up in the last recent years is immigration was pretty much flat, and then it jumped up incredible amounts. But this is, the CBA loans, the CERB, paying people money to sit at home, injecting that liquidity into the market.
Some of that. Here is the magnification. It's not just, the Government of Canada, they finance their deficit operations by issuing bonds, okay? And the Bank of Canada is the lender of last resort. Well, who wants to buy bonds from a country that's completely shut in? Nobody. Nobody wants them, okay? It's an unproductive asset. They're just printing currency out of nowhere. So the Bank of Canada becomes the lender of last resort, and they go out and buy all the deficit spending, but they went beyond that. Like, that's, that's kind of monetizing the debt. But at this point, like, they went out into the market, and through quantitative easing, they bought all of the bonds that were held by private entities. Okay, so we're not just financing the CBA and the CERB and the wage subsidies. It's not just that. They're actually going out and buying additional bonds on top of it, mostly held by financial institutions, who can in turn get money, have increased reserves, and because we operate on a fractional reserve system, once they sell their $1 billion worth of bonds, they don't go out and lend another $1 billion, they go out and lend another 10. That's what happens. It has an exponential multiplier effect, and that's that's what happened. And what happens to the
what brings to my memory at that time, what were interest rates at that time on
zero
mortgages?
I mean,
essentially 0%,
2%.
Right?
People are getting mortgages at less than 2%, right? Yeah. Less than 2%, because the overnight rate went to 0.25% effectively, right? Went to 0.25%. So,
So then you can see here with the money supply going down, it means there's less liquidity.
This is the bank.
Right?
Okay, this is still the Bank of Canada balance sheet. Okay,
Sure.
so what happens is they increase the money, so they go out into the market and they buy back the bonds being held primarily by financial institutions. And then those financial institutions in turn go out and lend that money at real aggressive terms, the less than 2%. And then what happens to the money supply? This is the money supply. And I need you to look at the numbers on these curves, because the metric on the side here does not do it as much justice, okay? Because I just want you to see where we were, because what did they say? It's like, it was a small increase, right? Modest increase, right? Didn't they call it modest increase, David Cochrane or something to that effect? This is the M2 money supply. So this is the entire money supply in circulation. The number of paper banknotes is irrelevant. It's a silly statistic. How much, commerce is conducted in paper banknotes outside of the drug dealers. Come on.
People are concerned about CBDCs. We kind of already have
the money going through in bank accounts and credit cards and wire transfers. Let's be real.
It's all fake,
banknotes. Jesus. Okay. There's $1.8 trillion in circulation at the beginning of this exercise, the beginning of this quantitative easing exercise. And it's not just the fiscal stimulus. The fiscal stimulus was actually small in comparison to the monetary stimulus going out, and the multiplier effect of buying those bonds from private financial institutions. And that what happens there is the money supply goes from $1.8 trillion. And where are we today? We're at $2.7 trillion. It goes up by $900 billion. So that means in the last 5 years, the money supply increased by 50%. 50% the money supply increase. And so when they say it came back, so even when they say, it came back down, it's the Bank of Canada shrunk their balance sheet, but that money still got lent out into the system. So even as they shrink their balance sheet from $540 billion to $245, they start selling these bonds back into the system. And, it's bought by regular old retail investors on their 60-40 split, or they got their, life insurance bullshit that's going to give them 5% rate of return when they could have bought shares in a life insurance company. It's so
it's like pension funds, that type of stuff, right?
Yeah. And I know there's going to be some guy out there selling life insurance policy in the comments, but I know your income depends on that. So, but keep selling those policies, because I own shares in all those insurance companies. So I'm not buying what you're selling, but I'm making money off the stuff that you're selling. So keep selling it, man. Keep hawking them in the comments if you want. Okay. So, as they sell off those bonds, it doesn't decrease the money supply. It just does not materially decrease the money supply. That money got dispersed and magnified and multiplied over time. We're not going back. It's the bomb went off. It's like the ship hit the ship hit the iceberg in 2022. In 2022, when everything got back rolling and we didn't undergo massive austerity, it was game over. It's like someone at the top, told everyone iceberg straight ahead, and they just hit the throttle, and here we are. And every single decision that you're making, this is the underpinning of that decision, right? We talk about power in politics. How do we get anything done? We have to spend money. You want healthcare? You want CPP? You want OAS benefits? You want infrastructures? How does it get done? With money. You want military spending? How does it get done? With money. Without it, there is no power.
Yeah.
You know what I mean? Yeah. Without it, you argue there's no politics either. It's been intrinsically tied to, money's been intrinsically tied to politics for the last 2,500 years if people study history. So it's been, ingrained in it. And so, but that's what the CBC, and I also just pull up here Stats Canada, the M2 money supply, because maybe someone thinks that trading economics is some right-wing conspiracy group. It's like, no, it's just if you want to match up the numbers, it's just less impressive to look at it here on the chart on Stats Canada website. But it's 2.7 trillion people. There's $2.7 trillion in the M2 money supply. It did not go back down. They sold off the term deposits, but that was just the term deposits were just a vehicle to get into the long-term bonds. That's all it was. It was just a temporary vehicle because they didn't want to have wild price action into the long-term bond market. So it made more sense to buy long-term bonds and short-term bonds initially, and then eventually sell off the short-term bonds so you can strategically over time execute the purchase of more long-term bonds without having wild price fluctuations.
Gotcha.
Because you're trying to pump $400 billion into the market. It can do some crazy things to long-term bond prices, right?
Yeah, for sure.
You would have, mortgage brokers going insane when you start looking at these. They'd be, the bond prices would be changing. The 5-year would be changing by the minute.
Oh yeah. The fixed 5-year would be.
It did. But it could have been. It would have been even more wild if they dump it straight into long-term bonds.
Yeah. Now with how things are going, they're saying that Tiff Macklin may not do a reduction in the rate coming up.
Yeah,
which would really only affect the variable rate and adjustable rate mortgages, but still, it does have an effect on the long term.
Yeah, and people really we look at inflation. And we look at unemployment and what central banks do, but ultimately, we're based on the, on the beast that is the U.S. dollar,
yes,
right? And so, you can reduce rates, but that in itself, reduces the value of your currency versus the U.S. dollar, and in itself becomes inflationary when you have to import goods that are priced in U.S. dollars. Mm-hmm. So it's for every other country other than the U.S. That matters a lot more than everyone thinks, right? And so, what the Bank of Canada does, they have to heavily watch what the Federal Reserve does in the U.S. Heavily watch. And now, been sitting around 73 cents on the dollar because you saw it, we dropped below 70 cents on the dollar periodically, right? Mm-hmm. And so that in itself puts upward pressure on inflation when you're importing goods priced in U.S. dollars. So, and I just want to show you, they had Andrew Shear went back on the CBC after this, and watch how they just sweep it under the rug. It's almost it's disappointing. So I'll show it to you here. So
Saskatchewan Conservative MP and newly elected opposition leader Andrew Shear is here with me in the studio. Mr. Shear, good to see you again. Thanks for being here.
Good to see you too.
The old job, the new job's a bit like the old job. You've held this role before. Congratulations on it. How do you plan to approach this in this unusual interim period where you're in this job?
Yeah, thanks very much. First of all, I do just want to correct something you said on the air last time I was on your show. You said the government did not permanently increase the money supply. Mm-hmm. They absolutely did. The money supply is over $700 billion on M2, higher today than it was during the pandemic, and the settlement balances are still significantly higher than pre-lockdown period. So I just want to put that on the table.
Okay, the Bank of Canada did that, to be clear.
Well, they were buying government bonds because of deficit spending. But anyway, what we're describing this.
But anyway,
then they just move on as if nothing else is more important than that. I just see sometimes these politicians. It's well, first of all, we shouldn't have been off by. You had time to prepare for this. It's $900 billion, not $700 billion. $200 billion matters a lot.
If I was
talking about $1 million.
If I was looking at my account,
$200 billion, 1.8 trillion to 2.7. It's $900 billion. What's $100 billion between friends? Maybe they're friends now, right? But that matters so much in that discussion. Is what do I want to see? I want to see someone who comes on there and hijacks the entire interview on that subject after that. Make them cut to commercial, because if they don't understand the money supply, they don't understand anything else about power and politics beyond that point. Yeah. It is a singular issue that overrides everything, because if that doesn't work, if the dollars were launching all these programs or taxes or payments, if that doesn't work, everything else falls apart.